Welcome to my channel. I'm Dr. Romano. In today's video, we are going to be discussing what is the difference between talent and experience, and how does that play a role in a company and also the world of investing, including financial trading, hedge fund selection, and many other types of industries, and how you could gauge in improving that quality to better situate yourself for the future, as well as for a company. How do you recruit talent? Are you looking for experience? Are you looking for talent? Talent and experience are two different things, you have to remember. From what I've experienced over my life, I would say 20-something years, I realized that companies, when HR is looking for talent, all they really are doing is looking for employees at other companies and to recruit those other employees to bring them over to the company. But you have to remember, because people move around so much over the past 20 years, the industry, whether it's investment banking, whether it's hedge funds or any type of industry, they're all doing the same exact thing, because they're recruiting people from other companies. And so pretty much after a couple of years or 5 years, it doesn't amount up to the quality of management that we used to have. You have to remember, manufacturing started to leave America in the 1970s and 80s. And overnight, you've seen people lose their pensions because the companies were going bankrupt in America. Our government changed the regulation on the company holding your pension, as opposed to now you have to hold your own pension. And because of that the company has to give you basically your pension every year and fund that account, things changed. It was no longer probable, let's say, to keep you at that company. And it was also for the employee, you had no reason to stay at the company. Because back then, you had to stay at the same company to get your pension after 20 years. And so what happened was, overnight, you've seen the massive layoffs at the investment banks, at every type of company possible. They no longer needed to keep you. That created a certain quality that we don't have today. It's very, very rare. Now, I've met many CEOs of many investment banks, of many hedge funds, just any big company. And I got the opportunities to talk with them for an hour or a couple hours, it depends. But what I noticed is that those people that stayed at the same company and somehow they became the CEO, there's one particular person that I have in mind. He's a CEO of a small investment bank. I can't say the name, but I asked him, was that your first job? And he says, no, it was my second job. And he says, after that, I stayed at the company for 20-something years, and then he became the CEO, which was very, very interesting. And what I gauged was, this was happening over and over. So the ideology that HR should recruit talent from other companies is actually really bad, because all you're doing is getting the same quality of management. Now, what needs to change is that you need to promote those people at your company. Don't try to get talent from another company. It doesn't work like that. When you promote people from your own company and you allow them to move up the ladder, they have a certain mental connection to that company, as if it was their own company, and they put more of a passion into going to work every day. Whereas when you recruit people and you get rid of people so fast, they realize that they're only going to last there 2.5 years, and that's according to the Book of Occupational Titles. In that book, it discusses your career, how long it's going to last, how much you're going to make, amount of people working in that type of career, and so forth. And so that's a very good book that you should look into before you go to college, because if you're going to major in literature and come out with a $50,000 a year salary, if you're lucky, then it doesn't make sense to pay $200,000 a year for college. So that's why you need to look at that book and find out where you are in your career based on that book. Before we continue the video, please remember to do thumbs up if you want to say thank you, Anthony. It's right there. All you have to do is just click it. Thank you so much. What I've noticed is that talent is an essence of a person's qualities. And it's their qualities to persevere the project, to accomplish the project or the goal. And so if you're a company CEO or of a small company, big company, it doesn't matter, you should be putting your funds into those employees that are willing to stay there and train them, not just send them to school or to give them an MBA or whatever it is, but to actually train them what they need to know for their job. For example, risk management at the investment bank where I used to work. I used to work in a group called Data Quality, and Data Quality was a very special group in the Chief Financial Office. We looked at the trading books before the Chief Financial Officer would look at them. And that was a very important position because in that position, I learned hands-on experience all the different fundamentals of what happens to a trading floor. Like when interest rates move, it affects traders. That's why in the first 2 quarters of 2022, the investment banks, some of them are 30-40% negative, and they're still negative. But the hedge fund community, they may have lost 10%, but now they're making it back. I believe that you can't really train talent, but what you can do is craft it to be better, okay? Because you have to remember that a hedge fund manager, as opposed to, let's say, a trader at an investment bank, some hedge funds actually come from the investment bank and they go on their own. Somehow they find a lot of capital, etc. Okay? Or sometimes they become the head trader at an investment bank and they find investors that have a lot of money, etc. But you have to remember how many years it takes to become a head trader. Whereas instead of going to work for the investment bank and wasting your youth, you should have, if you have a passion to trade and make money, because that's what you're attracted to, that's what gets your neurons in your head stimulated, then you should start trading when you're young. Have your parents open an account, it's called a paper trade account, at wherever the brokerage house is or wherever the trading platform you could find, and you trade fake money. If you start when you're very young, you will learn a lot. And then, of course, remember to read every book that you can on financial trading. Exactly. So that type of person that is going to read those books, that's going to train themselves, or that's going to take advantage of a company that will train them, as well as to try to ask many questions to other traders, that's talent. It's passion to learn what you need to do. So, for example, someone who does pontoon jumping at the equestrian center, they're going to take lessons throughout their life, pretty much their entire life, and the younger they start, the better they are when they turn their 19, 20, 25 years old. Someone who does dressage, that's an equestrian sport, that's a cultivated quality that you need, that you're gonna basically use for 20 years of your career. So to start in your 20s, it's not gonna happen. And so if people are starting sports when they're 5 years old in first grade or kindergarten, that's when you parents need to teach your kids how to trade. Trading is an art form, okay? It takes a number of qualities of individual. It's not just learning or teaching someone a strategy. You could do that to anyone. But what's different between those hedge fund managers that actually are able to produce quality returns, I'm not talking about a 50% return or 80% return. That's not quality. What I'm talking about in quality, I mean the ability to manage your losses, those losing trades. And in order to do that, you need experience. You need to think calmly. So if you teach kids when they're really young, at 10 years old, you start developing their trading. By the time they reach 20 or 18, when they could officially start making money, that is talent. And so what I suggest is that you guys and girls out there that want to find talent, you need to go into the school systems and maybe put up donations or some sort of foundation that you will fund these young kids to learn, or possibly deal with this school system, maybe at a Montessori school or a private school, and have a program in that school system. In first grade, you start teaching them finance. Not just how to count. I'm talking about by 10 years old, they should be able to know how to trade, not just speculate. And if you do that, for example, me, I knew how to ride a horse by the time I was 6. I knew not only how to ride a horse, but by 10, my parents gave me a lot of lessons. So throughout those years, I was very proficient at riding horses. That was my sport. And of course then the piano. I loved playing the piano. And then eventually in college, I did take advanced piano lessons over 4 years. And my professor is very famous. So in that case, no, I'm not a famous pianist, but that's not what I want to do. It was just something I wanted to learn, because I knew that it would open up the visual part of my brain. And you need visualization to be an entrepreneur. So in my case, I just knew these things because my parents, they would talk about these things. If you're a parent or if you own a school, you should be focusing on cultivating a program to teach these young kids at 6 years old, 7 years old. That's when life really starts for a kid. You start to understand where you want to be, your passions. They may not realize it at that time, but that's where it started for me. When I was a little kid, I was maybe, I was like 4 or 5. I was even that young. I said I wanted to become a doctor, and I did, of finance. So you need to cultivate these kids at a very young age so that by the time they're 20, 18 years old, 21, they're proficient at trading. Think about how many hedge fund managers out there who have kids and that take their kids to work with them. By the time they graduate high school or even middle school, they're a professional at that industry. Of course, the parent has to be open with the kids and to teach the kids, like a coach or someone who is just a trained teacher, that they have this quality. A relative of mine, my father used to always discuss with me what was going on in the business, and he would point out, he says, you have to do this, you have to do it this way because it creates that, etc. So by the time I was, I would say 15 or 20, I was a professional at the whatever that was. That's why it's so important to take kids seriously. Not when they're 20, 22, or 25, and then you give them the boot and you kick them out of the house. No, don't expect them to have a life at 25 all of a sudden that you give them a responsibility. No, you have to give them a responsibility when they're very young to create that talent that grows over their lifetime. And that's why it's so important to take note to kids that are in 5th and 6th grade. That's where you start cultivating talent. Yes, to a certain degree, talent we're born with it. But you have to remember that type of talent is very rare. And so someone like Albert Einstein or the owner of Tesla, Elon Musk, Nikola Tesla, Thomas Edison, there's so many people out there, even Napoleon Bonaparte, any leaders, generals, that is something that they were born with, okay? But you can cultivate talent starting when kids are very young to maybe direct them to an industry that you would think they like. Because remember, some kids need a push. That's what it is. And if you give them too much, let's say, ask them what they want to do for a living, they're not going to be able to answer you. I knew that. I mean, I'm not going to tell you what I would say, but I knew that as a young kid what I wanted to do. So it was so different for me. And so as a company, trying to find talent, you're wasting your time looking at other companies. You need to find those kids when they were younger. What did they do for fun? Don't look for leadership roles like if they were the president of a high school or they joined some group where they're the president of the group. No, leadership is different than cultivating talent, all right? Remember, the leaders out there today that are managing these big companies as CEOs and directors, the only thing they're good at was getting rid of their competition. Because remember, they could never do it by themselves without having all the other people do everything for them. But what they were good at was getting rid of their competition and moving to the top. And these type of people, they're always going to put down their competition. And so you have to really think about when you have a coworker talking bad about another coworker, there's a reason for that. It's because they know that that one's the real talent. That one has the real experience and the real perseverance to push through. And that's a threat to them. And so by the end of the career, you get the CEO, they got rid of everyone at the company that was actually proficient at their job, that could produce quality. Again, the system that we have today has to change. And I'll use an example because this is what I am, a doctor of hedge fund selection. You have these big hedge funds out there. What they're doing now is to manage 30 billion or 50 billion or 10 billion or even $1 billion. They are hiring traders to trade capital for them. And they're creating a trading floor such as an investment bank has, etc. So they're repeating the same bad qualities at what an investment bank has. And so this is why when they get so big, they can't really produce a really good quality return. Secondly, they have maybe issues with traders not really persevering the job fully because they're just an employee. And yes, getting bonus checks, etc. But you have to remember, when you give a bonus check, the tax rate for that is ridiculous. So maybe pay them more or actually do something a little bit different. Give them the opportunity to have their own hedge fund. So if you're a hedge fund with 30 billion, let's say, or 10 billion, stop trying to raise capital and get bigger. You should be taking that capital and allocating it to a number of small hedge funds and or creating a program to fund these young traders to trade and to give them that opportunity, even when they're young, to start trading and cultivating that over many years. Or if you do have traders like 37 traders or 50 traders trading for you, you create an LLC and an actual hedge fund for each of those traders. And I mentioned this in a previous video. And from there, you give them the responsibility, the keys of that company. Don't put your ownership in it. No, you fund them. And when you do that, you allow them to persevere and to create those returns that are quality. Because remember, when you have someone standing over you, like an investment bank does, it just creates bad quality. And it creates bad quality of returns. I know this because I'm probably the only one out there at this level that actually worked for an investment bank in the chief financial office, that actually reviewed the trading books on a daily basis for the chief financial officer. And I have a PhD in hedge fund selection. What is that? Well, I did research, 1,000 pages of research on the returns of hedge funds. So I'm a very rare breed of a type of person with these talents and these qualities and this type of experience. So I know this. And if you did that, if you gave the responsibility to each of those traders to let them have their own hedge fund so that they could persevere and do what they need to do, yeah, you could train them, you could give them advice, but I mean, it's self-explanatory. You need the administrator, you need the accountant, you need an audit company, etc. Over time, they'll get it. So you don't need to hold their hand, because when you hold their hand, they're expecting you to lead them. And that's the difference. So I noticed the big difference between certain friends of mine when I was a kid and my family. When the parents were too stringent with their kids, meaning they watched every little thing they did and they screamed at them continually, the kids were like vegetables. They couldn't even breathe. Whereas the parents that were like, oh, whatever, go out, do whatever you want, they didn't really take notice where their kids were. They let them go out on their own and do things. Those kids had a quality called street smarts, and they were just adults when they were really young. So I noticed a huge difference between the friends that I had at school or my parents' friends of their kids. I knew that as a kid. And so that's what you should not be doing, and that's what you're actually doing at the investment bank, and actually at big hedge funds. You're repeating what the investment banks do, and it creates a quality in the returns that is bad quality. So whereas when you get those hedge fund managers that started on their own, somehow they found the capital, they were really good at every little aspect, those people persevered. They created those quality returns. I want to thank you so much for watching my video. I hope you enjoyed, and if you did enjoy and you want to see more content, please remember to subscribe to my channel and do thumbs up to say thank you, Anthony. Thank you so much.